were collapsing. So it was probably the worst possible time to go to market.
In mid-2022, Caroline and Finematter are starting to fundraise. Time is running out, they need to fundraise. The thing is, when you build a startup that burns money, you have to raise money. Otherwise you die. What happens around you doesn't matter. You still need to raise money.
So this was sort of quite imperative that we raise this round. No way around it.
This is Raw Startup. Let's see what Finematter is.
I'm Caroline. I'm the founder of Finematter. We're a curated marketplace for independent jewelers, so a bit like a Michelin guide for jewelry.
Now let's get that fundraise going.
There was a whole lot of interest in what we were doing. So, lots of coffee conversations, lots of chats with investors, but that's kind of where it stopped, right? So we kept having like conversation upon conversation upon conversation, but once this had dragged on for a few weeks and eventually a few months.
Okay, good. Lots of meetings. How did you feel about the meetings?
I kind of realized, well, there's a whole lot of conversation going on, but not a whole lot of investing. I'm chatting with all the right people. They're excited about the company. The case is super strong. I thought we had great metrics and a really sort of good case. So at that point in time, I wasn't so worried.
Okay, good. Some of the meetings are materializing into something. We should get a term sheet soon.
Well, yeah, I mean, eventually we did sort of get to a term sheet, which is where you want to get to, right? Like, you think like, yes, I've got my term sheet, and now the round can sort of come together. I've only got like maybe a month of this fundraising prep left, and I can go back to business.
Things are good. Let's close that round. Not so fast. Turns out the term sheet isn't as locked in as we thought. It really requires an extra investor to come in to close the investment.
It was a bit like a sort of lukewarm commitment. But I was like, hey, I'll go to market. I'll find another fund. This is going to be fine.
All good. Let's keep pushing and you'll get there. At least there's some commitment. However, things are taking a turn to the worst.
But then in the few weeks that I'm sort of continuing pitching and so on, I start hearing less and less from this first fund.
Okay, now they're starting to disappear. That is never good. The one term sheet we had is starting to disappear. Christmas 2022 is starting to look like a rough one.
Heading into Christmas and the New Year, and having spent already like quite a few months on this fundraise, which was basically at nowhere. Like I was just drawing blanks, right? And the cliff edge is coming closer and closer, and you're thinking like, fuck, what do I do? How do I capitalize the business? And how do I make this happen fast?
I think it's time for a full reset and start to get this going again in 2023.
So I needed to change my strategy. I needed to do something different. And I knew from other founders that they'd had success raising from angels, because angels are typically more confident and they recognize a good case when they see it. So I thought, why don't I just try my luck and try raising this round with angels instead, rather than trying to pursue these VCs that are clearly not deploying.
Good, still going, and now with a new strategy.
So I changed my tactics to being angel focused exclusively, even though it was a pretty sizable round that we were trying to raise from angels only.
Now this is different. Raising a VC round has a certain playbook. Angel round, very different.
The challenges here were different than raising what I'd call a traditional round, because with VCs, it's a pretty sort of classic formula, right? You go looking for a lead, you get a term sheet, and then once you get a term sheet, you round up the rest of the round sort of fairly quickly and easily, I'd say. What we had to do in this case was basically try and set the terms ourselves and then syndicate them.
With a VC, you'd normally just let them set the terms. You're all good. With no VC, Caroline uses the existing investors to set the terms along with the biggest angels, locks it in, and then pitches it to other angels. Now, the next challenge is that angel checks are smaller, and you'll need a lot of investors to close this round.
We did this first close, and by that period in time, I feel like I reached out to pretty much every single person I've ever met in my life. So after this first close, I'm obviously still fundraising because we need to get to the total round size. But I'm like, what the hell do I do? How do I find more angels? Because angels, they don't go and advertise themselves readily on the internet. They're a lot harder to find than VCs. So this was sort of the next challenge here.
They are stuck. Caroline's not sure where to go next. She's running out of angels and doesn't know where to find the next ones. We might be in a situation where we have to reboot the process once again.
And I was lucky. I had some really early stage investors in the business who I met with at that point in time. And they basically gave me the pep talk I needed, which was, you're resourceful. There's always investors for a great case. So, sit down and think creatively about this. And I'm sure you'll come up with more people to approach. So it's basically what I did. I sort of blank paged the whole thing again. And I was like, who might be interested and excited about investing in a strong early stage?
Here we go. Now, how did you do that?
Thinking, I sort of started to think of this fundraise a little bit in the same way as I would think about, filling a sales pipeline. So, who are all of the potential types of angel investors that I can think of who I might potentially be able to reach out to? So, there's angel investors who are tagged on other LinkedIn deal announcements who've recently invested in other early stage businesses. There are people out there who are sort of in close proximity to the startup space, but who might not necessarily see a lot of deal flows. It could be lawyers, could be private equity investors, could be management consultants, all of these people that would sort of be familiar with investing and might want to diversify their portfolios, but who might not necessarily get in front of a case like ours or have the opportunity to invest. And then I also tried to see, could I widen my personal network circle by sort of leveraging all of my contacts and friends even to reach out to their network. So I would write like a little blurb, and I would send that to everyone I knew and be like, hey, if you know of anyone who might be interested in investing in a case like ours, please feel free to forward it on.
Basically, Caroline threw out a really wide net outside where angels are normally found to find some new angels.
So I was able to sort of fill up my pipeline, if you will, with a few hundred more potential investors that I could reach out to.
And those few hundred angels ended up doing the job. Caroline keeps going and they end up doing it, closing a great round.
So we raised a 2.5 million round, 36 investors.
Incredible, 36 investors. Well done. Not an easy task to maneuver this many investors. And this gives Finematter a lot of runway.
Well, so this gives us 12 to 18 months of runway, which is basically the runway that we need to break even with the business. Going super well. We've expanded this year to the States, and the US is now our largest market. So it's pretty much overtaken the UK and Europe in the space of a few months. It's now 35% of our turnover, which is super exciting.
Big breakthrough in the US. That's exactly how we do it. What can I say? Well done. You know what to do. Now stop watching and go build something.